Hello everybody, and once again welcome to Synonomics. Today I'm going to cover FMCG sector of India. So FMCG is a fast growing segment in India. What is FMCG, by the way? It's fast moving consumer goods. So everything that Britannia, Nestle, Hindustan Unilever, ITC, all these companies fall under that. So I'll cover that. I had good response on the defense sector of India update. And guess what? The stocks I did cover in the defense sector has gone up further. Hindustan Aeronautics, it is now trading at around 37.50. And there is a news that is going to split now. Bharat Electronics was hovering at around 105 rupees. Now it has crossed 120. Bharat Dynamics was at around 1000. Now it's pretty much around 1150 or so. And the other one that I had covered as well was Mesgaon Dock. That went from around 800-900 to over 1200. So guys, these are really fast moving segments of Indian market, Indian economy. And today I'm going to cover FMCG, fast moving consumer goods. Why is that? I have chosen fast moving consumer good. If you remember, some of you who have watched my previous video, that was 7.2% GDP growth in India. I'll actually put a link in the section below. Some of you who have not watched, please watch it, where I have covered it in details and I have leveraged Morgan Stanley's latest report on that. So just to refresh your memory on that, India actually just recorded 7.2% GDP growth, gross domestic product growth. And in the nominal terms, it's 16.1%. From the overall economy perspective, India right now is at $3.5 trillion. And by 2032, it's expected to be around $8+ trillion. Yes, you have heard it right. $8+ trillion. Per capita income right now is at around $2,500. Yes, it's pretty low, $2,500. By 2032, it's going to be $5,200. It's going to be more than double, 2.5 times. At the same time, more relevant to our topic today is the retail segment. Guys, the retail segment today is $781 billion. And that's going to go to $1834 billion by 2032. And all these data are coming from Morgan Stanley's report, which claims that India has transformed itself in the last 9 years. I won't go into the details, just remember this pivot. Retail market going to go from $781 billion to $1834 trillion in next 9 years, or 10 years you can call it. So let's get back to the FMCG segment, the fast moving consumer goods. In the last 1 year, this FMCG index, and I'll come to the index later, has grown 32% as compared to the Nifty 50 of 12% roughly. This year, 2023, it has given a 16% return. So let's talk a little bit about what is FMCG index of Nifty. The Nifty has multiple index. One is the Bank Nifty, one is Nifty IT, one is Nifty Metal, one is Nifty FMCG Nifty. So we are talking about Nifty FMCG index here. It has the major companies, and their weight is as follows actually. If you look at Britannia, has roughly 11% or 7 to 8% weightage there. The largest weightage is actually ITC. 33%, followed by Hindustan Unilever, and that's 22%. And then has Nestle at around 8%. And Britannia, as I mentioned earlier, it's around 7 to 8%. Varun Beverages is the bottling company who actually makes juices, as well as they have the license for Pepsi bottling in India. They also have 4% weightage there. These are the top companies in the FMCG segment, FMCG index, and I'm going to cover 4 of them. Right? Nestle, Britannia, Hindustan Unilever, and ITC. If you look at from the growth perspective, from the price increase perspective this year, as I mentioned, this index has given 16% return. Whereas, if you look at Britannia, for an example, is at 9%. Nestle at around 11-12%. If you look at ITC, that's a whopping 35%. Yes, you heard it right. 35% return this year only, in the first 5 months. And Hindustan Unilever is kind of pretty sluggish, sitting at around 4%. But guys, there is one more company, by the way, which I'm not going to cover today because it's a little bit smaller company. And remember, in stock market, you cannot fish small companies, a high risk. So in all my analysis, I actually focus on the large, big companies who are constant compounders. And trust me, Britannia, Nestle, HUL, ITC, these are constant compounders. You'll not multiply your money 20 times in 1 year, but it will give you 15 to 18% return every year. So the other company is Mrs. Bector. It's a small company pretty much operating in the same segment, and it has given 80% return. Yes, you have heard it right. 80% return. They operate in the same biscuit segment. 60% of their business is coming from biscuit. 35% comes from bread and bakery. And 5% they also do contract manufacturing, by the way. So if you're interested, think about it. Let's look at the companies one by one. So let's look at Britannia for an example. As I mentioned, if you look at the India's market for the biscuit, it's 46,000 crores. For some of you who have problem understanding crores, let me tell you, 100,000 crore is 1 trillion. So 46,000 crore is actually 0.46 trillion rupees. That's the market size. And Britannia has 33% of that, 1/3. The next one is Parle, 29%. And ITC is also having something like 11 to 12%. And then the rest of the companies have the rest of the share. Having said that, 65% of this market, biscuit market, is organized. 35% is still unorganized. And if you look at the other segment, which is bread and bakery, you can call it, but bread, let's focus on bread actually. That's 146, roughly 140,000 crores market size. So in trillion rupees, it's 1.35 to 1.4 to be precise. Trillion rupees is the market size. 50% of that is organized and 50% is unorganized. And Britannia owns 30%, 13%, 13% of that market. In the modern industries, they have another 6, 7, 8% like that. And the rest are all shared by others. So the company who is owning 33% market share of biscuit, 13% market share of bread, and expanding in other segments, they have ghee and they have a lot of other stuffs as well that's coming up, which is growing as well. How can we neglect this company? Similarly, If you look at Nestle, Maggi, it pretty much owns 50 to 60% market share of Maggi in India. Not only that, Cerelac. Every kid born in India actually goes for, takes Cerelac. This is a huge monopoly out there. And there are plenty of other products. I'm not getting into the details here. You can Google and search it. And Nestle is an international brand anyway. Even trades in US, Nestle SA. We are talking here about Nestle India. So as I talked about it, Nestle on the other hand, pretty much is another giant. The stock price has skyrocketed in the last 4 or 5 years. I shouldn't say skyrocketed because there are plenty of others who are multiplying multiple times. 2016 before monetization, or 2017, in the late 2017, the price was hovering at around 8,000 rupees. Right now it's pretty much 22,500. So roughly 3.5 to 4 times in 5 years. Britannia, on the other hand, was trading at around 3,000, and it gave a bonus. Yes, it gave a bonus around 2017-18. So if you had 1 share, now you own 2 shares of that. So from that perspective, the 300, if you bought 1 share in 3,000, you now have 2 shares. Right now, Britannia is trading at around 5,000, roughly 5,000, 49.50, and it's like flirting with 5,000 mark. So if you invested 3,000 4 years back, you are at 10,000 today. How can you ignore these companies? In a country which is growing the fastest in the world, 7.2% GDP growth, and the country which has the highest population, 142 crores. 60 million families are middle class, and they'll be using, of course, they're consuming biscuit and bread and all those. And by 2032, there'll be 160 million families in the middle class. So there'll be an addition of 100 million families from poverty line to middle class. So let's look at the other companies as well. So coming back to the financials, all these FMCG companies are trading at a little bit higher multiple, by the way. So if you guys are new to that and you're very much into the analysis of low P stocks, etc., please fasten your seatbelt. Britannia, in 1 year forward earning, Britannia trades at 47x, roughly 50x. Nestle trades at 80x. Yes, you have heard it right, 80x. Hindustan Unilever, 52x. And if you look at ITC, that's pretty cheap, by the way. Still cheap from the P perspective. So 1 year forward earning, 25x. And the other example I gave you, Mrs. Bector, which is a little bit smaller company, a bit dicey to invest there because there will be huge price fluctuation. So I don't really get into those kind of stocks. That's trading at around 30x, by the way, just for your information. So guys, with this, the whole FMCG sector is pretty much a growing sector in India. Think about it. And remember, all these are not my recommendations. These are for entertainment and educational purposes. Entertainment for people who are not in the market, they just want to watch, they just love to watch the excitement going on, just like we watch cricket and football. I personally, I don't play, now at least nowadays. I watch it for fun, for entertainment. So there are plenty of you who are watching stock market for entertainment. And there are plenty of you as well who are into the market. So the guys who are watching is for entertainment for them. The guys who are in the market is like education for them. With that, I'd like to close my topic today. If you have any further questions, you can just send me your comments. If you like this video, don't forget to share and subscribe. And remember, the purpose of this channel is to create financial awareness so that you can act and make money. With that, it's a goodbye from your friend Pankaj Sinha. Bye-bye.